In the past 3 weeks, the S&P and Nasdaq are down 10%. On this video, I will talk about the tariffs that Trump imposed on Canada, Mexico, and China. Here is the video format. I will explain how do tariffs work, what countries are being tariffed and how those countries respond, and what happened to the markets in the previous Trump administration when tariffs were applied. So tariff is a form of tax imposed by a government on imported goods and services. It makes imported products more expensive in comparison to products that were manufactured or made domestically, and that essentially get consumers to buy more products that have been made in the country rather than buying products that were imported. So how exactly tariffs work and how the government gain from that? When goods arrive at a country's border, consumers agencies inspect and assess them. Importers file paperwork declaring the value, type, and origin of the goods. The tariff is calculated based on percentage of the goods value, or it can be a fixed amount per unit, or it can be both. Importers must pay the tariff before customs release the goods for sale or distribution. Eventually, the tariffs go into the government's treasury, helping fund public service or offsetting trade imbalance. As of now, the countries that are being tariffed are Canada, Mexico, and China. On February 1st, 2025, President Trump signed executive order imposing 25% tariff on all goods from Canada and Mexico with a 10% tariff specifically on Canadian energy exports, including oil, natural gas, and electricity. Also, the US government imposed an extra 10% tariff on Chinese goods, which was added to the already existing tariff that were as high as 25% on various Chinese imports. That means that 35% tariffs applied to some goods that are imported from China. So Canada responded by announcing a 25% increase in the cost of electricity exported to the US, and that estimated to impact approximately 1.5 million American consumers. They also indicated a possibility of halting electricity export entirely if tension escalates. Also, Canada imposed 25% tariffs on $30 billion worth of US goods, with plans to extend these tariffs to an additional $95 billion worth of goods on March 25. As of now, Mexico haven't responded yet, and China, on February 10th, imposed 15% tariffs on US coal and liquefied natural gas, and 10% tariffs on oil and agricultural machinery. Some of the tariffs that China has made is 15% on US chicken, wheat, corn, and cotton. They also imply 10% tariff on products like pork, beef, fruits, and vegetables. So as of now, the tension keeps going on, and we're just going to have to wait and see. But what we can do as of now to reduce the uncertainty of further developments is find out what happened in the previous administration of Trump. In March 2018, Trump imposed steel and aluminum tariffs on multiple countries, including China. The US implied in 2018 25% tariff on $34 billion of Chinese goods, and in 2019, tariff increased to $200 billion of Chinese goods. In 2019, the US kept increasing the tariffs implied on China until they got into agreement that the US is going to cap the tariff to an amount of $370 billion. So that trade war went between 2018 to 2020, and then the market flipped because the corona started. So between 2018 to January 2020, the S&P 500 went up 20% and Nasdaq went up 45%. So back then, even though the trading war was still in progress, the markets kept going up. So as of now, even though the markets are selling off, they might recover as they did last time. Hopefully that will help you figure out what to do next. I hope you enjoyed the video, and I will see you in the next one.